You asked, we delivered. A couple months ago, I sat down with Jayson Lowe, who just shared all the interesting things that he's doing with his family, banking, family constitution, and we had so many people say it'd be amazing if he did a live Q&A. It'd be amazing if he did a live Q&A, and that's exactly what we did. And so in this video that you're about to watch, Jayson sat down with myself and about 20 other people that were a part of this live Q&A and opened up everything about his family constitution, how life insurance works, how his family banking works, and answered some of my questions and some of the many questions in the audience. You better buckle up, as Jayson would say, because there's a lot here. Very excited to hear your comments, your takeaways. And I have a funny feeling that this won't be the last video that Jayson and I do. Enjoy. If you can, turn on your camera. There's an energy that gets exchanged virtually, and I don't have any scripted questions. So this is about the group, and so I'm excited to learn, dive in. I'm sure I'll have questions, but I'm going to turn it back over to you, J Lo, and I know just from some of the people and the pictures that I can see, we're gonna have a phenomenal conversation. Richard, you can get us started, but let the fun begin.
All
and
right.
then, Jim, you're on deck. So
Let's do it. Welcome, everybody. Good to see you all again. Jayson, I'm so interested in the Constitution part of this whole thing.
All right.
Family Constitution part of it. I've been working on my own, and I'm very, very interested in what your influences, sources are, how much input other people like an advisor or attorney might have in that.
Yep.
What type of sections you have? Like, is there governance section, loan policies, that kind of stuff. So dive deep, spend as much time as you want, because I'm going to extract it all.
All right. Okay, good. Everybody want to see that?
Yeah, man.
Okay, would that be helpful? All right, let's do it. Okay, here we go. Can everybody see this on my screen?
Yep.
So what you're looking at is our family constitution. Now you can see here that it's 110 pages single-sided. This is the PDF version of it. There are some specific things, Richard, that I'd like to highlight. And then if you're okay with it, just hop right in and just back me up. Ask me any questions that come up for you as we do that. Would that be okay?
Yeah, please do.
So where this began, it began with my belief that we already had a family constitution. As a family, we already had our beliefs, our ambitions, our objectives, our values. We just didn't have them documented. So when you think of that as it relates to your own experience with your own family, Richard, or the clients that you have now or the clients that you want to have, what I would suggest to you and to everyone else who's here is that all of you and all of them already have a family constitution. It's just not assembled, documented. Maybe it hasn't even been discussed. And so that's where it began for me and my family in sitting down and saying, let's walk through specifically who we are as a family, what we value, what we aspire to achieve, and how that will be governed. And that we, of course, again, taking some great guidance from my late mentor in thinking long range, meaning thinking 3 generations past your own, and ensuring that this document governs any of the trusts that we have in place, both Canada, the United States, and that this is the one governing document that addresses it. So the very beginning is a letter from me, patriarch of the family. This letter is to be read aloud at every family office meeting that we have going forward in perpetuity. At our last session, one of my twin daughters, Charlotte, she read out loud this letter from me. And this letter outlines some of the things that I've just described to you. I may be scrolling a little quick for you, Richard. Forgive me. I want to get through a lot of this document.
I know. I appreciate it.
And
Conceptually, it's lovely. Yeah.
yeah, well, thank you. And then we move into our family's identity, who we are. So it's one thing to think long range, it's another to communicate long range. And as financial professionals, we've all heard, well, let me know if you had a penny for every time you've heard generational wealth, those two words put together, that you would be as wealthy as Warren Buffett. Is that true?
Yeah, it's true for sure.
Right? Have we not all heard that enough times? But who's discussing generational values, generational faith, generational ambition, generational governance? It's one thing to transfer wealth. It's a whole entirely different thing to transfer the wealth mentality. That is a completely different ballgame. And the identity statement of our family matters because it describes who we are, why we exist, what we believe. Isn't that good?
Was all this stuff here also part of like the family sort of group, like a brainstorm session?
1000% yes.
Also, I should just say if someone has a follow-up question based on this question, you can just unmute and jump in. So I want you to know that I want this to be as free-flowing as possible. So if there's a question as Jason is scrolling or a part two to what Richard mentioned, you can jump the line.
Can I ask a question about the family office to you, Jason?
Yeah, please. Hey, Jim, how are you, man?
I'm great. How are you doing up north?
Oh, it's great to be with you, brother. I'm doing outstanding. Thank you. It's good to see you.
We're down here in the warm lands. I think about you as you're up there freezing to death up there in the cold country.
Well, I'll be back. I spend part of my year in Florida, so I'm doing well.
Good, good. So you didn't start out with a family office. It's interesting that I'm seeing you. It seems like you're defining the bank as also the family office, but you didn't start out with a family. First of all, is that a correct assumption that you're considering the family office to be the family bank?
No, so the family
Good.
banking. So the way that we address, and you'll see this, I'm going to reference it specifically in the Constitution. So we have an investment function, a lending function, a giving function through the Lowe Family Foundation of Giving. So those all represent components of the family office. Family banking is one.
Got it. Okay.
Yeah, great question. Thank you for that. And so we outline what is expected of us, our relationship with wealth, our commitment to giving. Jim, this would be one of the reference points.
So you have a family foundation as well.
We do. Yes. Yeah.
Got it.
And the question always comes up, how do you address things with the children, grandchildren, great-grandchildren, etc., spouses of direct blood lineage of the Lowe family? All of that is addressed in the Constitution. We talk about our legacy, our promise. And then we have a brief summary for advisors, people who are advising our family office, our foundational truths that are never to be deviated from. This one being primarily pretty important.
Hmm. So that extends to in-laws and people who marry into the family.
Well, I'll give you an example. Spouses have no, for lack of a better description, have no ability to either encroach or are entitled to anything from the family trusts. No exceptions. ever.
Do you insure them?
Yeah, as part of our family banking system, we do. And that, again, is optional. We make that optional for family members. If they want to participate, then they have to agree to their life being insured. But that is separate and exclusive from the trust. The trust is just a completely different basket altogether.
Mm.
So it's not a life insurance trust.
No. No.
Okay.
And
Jason,
how
can
do
you go
you-
back up? Can you?
Yeah, go ahead.
So access is behavioral based, not birthright. So that is, even though they're born into the family, if they violate or if they violate what's in the Constitution, they're out. Is that what you're referencing there?
That's exactly correct. And we dive much deeper into how that gets governed.
Okay. And then
Okay.
governance is centralized. If you're going to go through these in more detail, we can just move on.
I will.
Okay.
Yeah, but this is the whole point. It's meant to trigger some really good questions. What I would bring so much joy to my heart is to see more families obviously do this. You do not have to be rich to do this. That's one thing that I do want to clarify, because in hindsight, I would have loved to have assembled this and put this together 19 years ago. And so we were not rich then. And so this is something I just want to make sure that I convey, that this is not something that's exclusive to, hey, once you trigger a certain number in net worth, then you should be focused on this. There couldn't be anything farther from reality there. You should be initiating this now without delay. We communicate the authority, the trust overview structure, the fact that it's governed by one constitution, one investment mandate, one operating manual. Everything is here. The jurisdiction only exists for tax compliance, not cultural separation. There's no cultural separation there. And then if I go down to, I won't make anybody dizzy here. And then if I go down to, the investments, we're engaged in a number of things, share ownership in a number of companies, private equity that we primarily do through CAS out of Houston, and some private placements that we do, our dividend reinvestment portfolio, which is enormous. To give you a little bit of context around that. So the portfolio itself is in place not to be liquidated partially or fully at any point. The portfolio is in place to have a light switch, and the light switch has two options: automatic reinvestment, income. So if you picture a day when Rebecca and I decide that we want to flip the light switch from where it is now, which is automatic reinvestment, to income, well, when we graduate, we go to be with the Lord again, that switch inside of the family trust gets flipped back to automatic reinvestment. And then when our children reach an age where they want to flip the switch, they can't flip the switch on the entire portfolio to say, hey, can you go ahead and start providing all of this income. There's our children's inheritances are capped. Our children's receipt of funds from the trust is capped. Primarily, that money, when it flips the switch from automatic reinvestment to income, a significant portion of that is going to be given through the foundation. And so, but the portfolio doesn't go away. So when people are talking about all the risks associated with investing in the stock market, those are legitimate risks to navigate. But we buy businesses, and we participate in an ever-increasing share of the distributable cash flow of those businesses. These are publicly traded companies. And I'm 32 years into that journey. Most people that I meet, they want success in their function of investing on a microwave timetable. Can I just plug in, quick cook, hit the button, and then I'm rich when the bell goes off? I've been doing this 32 years. And that portfolio has grown to become enormous. And I haven't sold a single share of stock, with the exception of a few that no longer aligned with my value system.
Do you expect that the trust income for the children, for example, is really geared towards retirement years when they're not producing as much external income?
That's a great question. There are encroachment provisions for things like, heaven forbid, critical illness, permanent disability, things of that nature. But I expect future generations to earn their own primary source of income. The trust is meant to be supplementary so that they can, enjoy a home that takes good care of their family. There'll never be a situation where the lights don't go on, the heat doesn't go on, the fridge and pantry aren't full of food. But there won't be anybody in our family driving around in Bentleys and Lambos and Ferraris, and I would haunt them in eternity.
Good for you. I'll help you.
And, this doesn't address the death benefit of all the insurance policies, which are meant to replenish, and to provide, while we're living, all of the benefits that all of you are intimately familiar with. So to address what Jim mentioned earlier, so Jim, you'll see here, we have three different components. We have an ownership track. So capital is deployed in high-quality dividend-paying companies, multi-decade history, conservative balance sheets, dividend reinvestment, automatic by default. Our lending track. So if we're going to invest in government investment grade fixed income, or we're going to lend capital to family through our family banking system and policy loans, no public hard lending. So lending to people outside the family just simply would not be permitted through the device of our family trusts. And then our opportunity pool, we're maintaining a minimum of 5% of assets in readily accessible cash. That doesn't include accessible cash value from life insurance contracts. It's to be maintained in guaranteed or near cash instruments, and that's just good governance, especially
Jayson,
especially when you're dealing with that amount of money. Yeah, come on in, Jim.
can you scroll back up again just for a second?
Sure.
So one of the questions I have is who actually owns, how are you holding the drips, for example? Are they held in the trust, or are they held in the foundation? And the policies, I'm trying to figure out the ownership process there.
Yeah, really good question. So presently they're held both personally and corporately, and the trust owns shares in the corporate entities that own those dividend paying stocks.
It's the
And
same trust that holds the policies then?
Well, we have two different trusts, one in the US and one in Canada, but yes, for simplicity, I'll say yes. If you were to take a look at how we're put together with all of our operating holding companies and entities, you would probably need to take a couple of Tylenol.
But it sounds like you've created investment entities, and the shares of those are held in these trusts. These rules that you're putting out, they seem to extend beyond just the trust. They're kind of like general constitutional rules for all family assets, right?
That is absolutely correct. Yeah, I did not want to leave any stone unturned. I did not want there to be any vagary. I wanted it to be crystal clear.
Does the family foundation hold any assets?
No, not presently.
Do you intend to?
Yep. Once family members start graduating. Yes.
Why? You got me curious. Why then? Why not sooner than that?
Well, we do give through the foundation. Money flows through it, but it does not presently own anything.
You
And
use it
it's
for distribution. That is what how
yeah,
you're using it now. Got it. Okay.
yeah, it's purely for tax planning.
Do you have any life insurance trusts, or you keep them all out in the wild with trusts as beneficiaries?
Yeah, we do not have life insurance trusts. We do not utilize them.
Got it.
Yeah. And then our income distributions, governance around how the trust owns policies on every direct descendant, where it begins. So it begins at 16 days of age, what the minimum annual premium per child is, how long premiums are funded for. Now, none of this occurs in the sense that we expect every descendant to own their own policies personally. That's also outlined in the Constitution. And then eligibility and disqualification, that is all outlined here. So you can see here what immediate and permanent disqualifiers include. And you can see right here. And here.
What is spousal interference?
Spousal interference would be
Divorce decrees.
yeah, God forbid. I mean, if, one of our children is married and, one of our children passes away, and their surviving spouse readjusts and then we, the family, meaning we get some legal document, somebody wants to attempt to encroach upon the
I
trust.
see.
And so that just would not happen. A nuclear bomb wouldn't penetrate it.
So if you had an unfortunate, if you had a spouse that was left widowed and they weren't blood relation, are you saying that they would have no claim to the death benefit inside the trust? I mean, you would want your grandchildren, I'm sure you would, protected. How would you handle that?
Yeah, it's a really good question, Kent. Thank you for asking. So participation in the trust means owning policies personally. And so the family member, the direct blood lineage family member would have had personal coverage that would be left behind to that surviving spouse. The trust,
That would,
the trust would
yeah.
provide no benefit there, but to the kids, direct blood lineage kids and grandkids and great grandkids and all that wonderful stuff, the trust would absolutely provide, and there's all the provisions are outlined in the trust.
So you don't expect every policy the family originates to go into the trust. Here's my example. I have 9 policies, and my youngest son, my 2 sons have already, as a 19-year-old and a 21-year-old, they started their own policies, which I encouraged with their own money. And I have policies on them as well that I am the owner of, but they are the owner of their policies. Someday they will marry, and I should encourage them more than likely to make that future spouse the benefit of their personal policies.
Absolutely.
But the policies that I own are mine.
Right.
I could or could not support, if there wasn't enough insurance there, or if I wanted to, I could certainly help, but I wouldn't be obligated to, I guess you're saying.
That's exactly
Okay.
right. It's the trust itself will have policies in place on family members as lives insured, and those family members would not participate in distributions from the trust if they did not have their own personally owned policies, because the trust itself is an entity, and there are no exceptions to that. So like our own children, as an example, we have 4 children. I have 3 daughters and a son, and they will not participate in the family trust if they do not, at the age that they're eligible, which my son is approaching that age now in just over a month and a half here, and they have to purchase and maintain premium on their own policies. That is separate from what the trust owns.
And you can't dictate how much they can afford. Their careers will dictate how much cash flow they have. You just want to see that they're investing in or not. That's not the word they own. They're going to go out and get policies.
That's correct. Yeah, it's behavior based. And then we've got
So just so I'm clear, when your son at age, when you graduate, your son obviously there'll be something that comes from this, what we're talking about, this trust. But he'll get a portion. If he's one of 3 children, he'll get a third of what was designated to go to him, but there may be quite a bit held back to replenish the trust funds, the funds to buy more insurance, right?
well, if I understand the question, so the death benefit proceeds of the policy that the trust owns will be paid in their entirety to the trust. So when he owns his own contracts and he passes away, he can leave his own death benefit proceeds to whomever he wants. And as you mentioned, we're not going to dictate minimum premium or anything like that. It's all behavior based. And then the Constitution itself, where this all begins.
Would you encourage him to have his own trust, or do you want to keep the money together? When he dies, where does his money go? Does it go into a trust, or would it go directly to his beneficiaries?
Yeah. So like I mentioned, Kent, so just picture for a moment. So you have the trust, and the trust owns policies, in this case on my son. And then you have my son who's going to personally own his own policies. When he graduates, he can leave the death benefit behind to whomever he wants. Does that make sense?
Yes.
If he decides to establish a trust of his own, that is his prerogative and his privilege to do that. It does not impact what the Lowe family trust owns presently or in the future. That is a segregated financial ecosystem. What our kids do personally, if they want to participate in the advantage and benefits of the Lowe family trust, they must own policies on their lives personally. It's not negotiable. And there's no, let me do a single premium pay or let me pay the premium for 4 years and never pay it again. You've got to maintain premium.
So Jason, when you say that they have to have policies so they can participate in the family trust, the benefits of the family trust, help me understand what are the specific benefits to your son, for example, from the family trust, as opposed to having his own policy? What benefits come from the family trust?
Yeah, it's a great question. It's all spelled out here. I'm going to get to it.
Okay.
Okay. And so we've got, let me just get to the piece that I wanted to get to here. Bear with me for 1 second. Here, let me pause this so I'm not making anybody dizzy while we do this here. All right. Any other questions, Caleb, that have come up that I can address while I'm scrolling to what I want to get
Well,
to?
I have a lot of questions, but I think the best thing would be you show this and then we ask questions afterwards, because I don't want to go on 30 or 40 different rabbit trails.
Okay.
So
That's good. So we're pretty clear in defining, a direct bloodline descendant. We talk about permanent exclusion, what individuals are permanently and irrevocably excluded. And so you can see here, who those folks are, and what excluded individuals, would never be able to access. And this is a big one. We have a prenuptial mandate in place. So if you envision, as children become adults and, meet someone and decide that they want to get married and start a family, and we have a prenuptial mandate in place to, execute, and the conditions around that. And that, as you can see here, no legal claims, no circumstances there. We have very clear moral, ethical, and character standards. And where this came from was when Rebecca and I got pregnant with our firstborn. So both my parents passed away prematurely, and I had no playbook on, how to be a good husband, a good father. My dad was a workaholic. He was out of the home working all the time. And so I sat down with Rebecca and I said, well, how do we want to do this? Because I don't have a playbook. I have some great mentors in my life. And we agreed that rather than have 1,000 different ground rules for our children, we narrowed it down to 3. And our family golden rules, since long before Jackson, our firstborn, came along, was to be respectful, responsible, and kind. And that we could attribute positive behavior, negative behavior to either one of those 3 family golden rules. And when I break one or more of them, I'm accountable, and I express that to my children or to my beautiful wife, Rebecca. And now we start hearing, as our kids are teenagers, we can hear them having those discussions among each other. Hey, when we argued earlier, it certainly wasn't respectful and it wasn't kind. And, I could be more responsible. I apologize. Will you accept my apology? And those are the exact words I would use with my children as they were growing up. When I messed up, I would say, I apologize. Will you accept my apology? And, gratitude is just our energy as a family. That's what brings us energy. So we included that in there. We all talked about it when we developed this document. And it was just an overall consensus. It was like, yeah, gratitude is our fuel, and a commitment to giving. It's very, very important to us. And we want to transfer that, right? We can transfer a check, but it's all these other things that we want to transfer to the next generation. Conduct standards.
Jayson, you might be getting to this right now, but I remember earlier you had certain things that would be like automatically disclude you, like a criminal record being one of them. But then two of the other ones below that seemed more arbitrary, just from like what does dishonoring mean and all. And maybe you're going to get to that. But
right.
I would imagine that if someone is disrespectful, that doesn't get them booted, especially if they say they're sorry or all. But I think you're going to get to that. I'm just curious about what gets you permanently booted from the family trust.
It's right here on the screen for you.
How do you define immoral conduct?
Like learned hand, judge learned hand. I'll know it when I see it.
Yeah. How do I quantify that?
Well, you're the final arbiter, aren't you?
Yeah.
So it's your decision as to what is immoral.
Yeah. Like what, while I'm alive, and if it's, I always trust, the obvious, but I always trust my instincts, and my instincts are just a culmination of my life experience. And so if you can pass the mirror test, if you can look in the mirror and say, yeah, I really believe that that's the moral thing to do. Or if you look in the mirror and you go, not quite sure, then it's probably immoral.
Okay.
And I don't want to share any specific examples that enter my mind because,
I understand.
yeah, it's just,
Can I ask one other question
yeah,
around just dishonesty? So I don't know if there's an age limit. Like if obviously if a 5-year-old lies to you, it's probably different than a 21-year-old.
yeah,
So I'm curious how you handle that. And is is all lies created equal? Like we all lie. Like when the waitress comes over and says, "Hey, did you like the food?" and I say, "Yeah," and I didn't. That's a lie. And then there's a lie that's like probably much more damaging. And so I'm curious how you take dishonesty, because fraud is pretty black and white, I would imagine.
yeah.
Deceit, I can get behind. Dishonesty, I don't have a rank. Like it's hard for me to measure that because of just the examples that I used.
Yeah, it's a great question. It's harmful or unharmful. And so if it creates harm, that is dishonesty. That is definitely going to have, consequence.
Okay.
If it does not create harm, in other words, it was harmless. We're all sinners. And so,
Okay.
does that help?
Jason, failure
Yes.
to uphold marriage requirements, would that include divorce?
No, no. If the marriage is just irreparable and it's not working, it's better for both people to move on to greener pastures. But if you know somebody takes off for a weekend and decides that their vows don't matter,
Right.
then you're going to have my undivided attention.
That falls under a couple of those bullet points.
Yep. Really, really good questions too, by the way. Thank you, everybody. And Caleb, this ties into temporary issues versus permanent, just around financial hardship, things like that. There's a path to reinstatement to participate in the Lowe Family Trust. Beneficiary eligibility. We're getting close to the one section that I wanted to make sure I covered here. Again, permanent disqualification. This one is always a hot button with people, which, I acknowledge, but it's our Constitution. And if a family member is proactive in communicating and saying, "Hey, I'm experiencing some temporary financial hardship. We can readjust a repayment schedule." We're more than happy to do that. That's part of having control, right? When you're in a position of total control. But if that's not communicated and there's default, you're done.
Hey, Jason, on that note, this may be a dumb question, but at the conference you mentioned that you do 10% interest
Yes.
loans. What's the payment schedule, the amortization schedule? Is it a fixed for every loan,
No.
or do you base it on like what the market rates are for that particular?
That is such an awesome question. It's we work backward from the payment. So, for example, my niece who just started college, and she purchased a vehicle, and based on what she's earning and what she spends to take care of her personal expenses, we started with a payment amount, and then we engineered the repayment schedule on that amount.
Okay.
Yeah.
Okay.
Ridiculously simple.
Yeah. Thank you.
You're welcome. Yeah. Awesome
Jay-
question.
Jason, what if it were a mortgage? Would you, first of all, would you entertain a $500,000 home or a home within the realm of, within reasonability? And then how would that 10%, that would have to probably be a 50-year payment term
Hopefully.
on its, yeah. So, yeah, I mean, I mean, go ahead and speak to that. Is that something you would entertain, or would you tell them
All day long?
Okay.
Yeah, all day long. And for those of you who aren't aware, so when Rebecca and I got going in our journey with the process, and we had a mortgage on our principal residence, you could get 40-year amortization schedules back then here in Canada. And we got rid of the conventional bank. It took us 7 years to do it. And Nelson Nelson was the first person I called, and I said, "Nelson, we did it." And he said, "Not so fast." So, "You sitting down?" I said, "I am now." He said, "Do you want to be an honest banker?" I said, "I sure do." He said, "Now you would have been committed to 33 more years on that payment schedule." And I said, "Yes, sir."
Okay. Let's say it is 50.
Hold on, Ken. Hold on. What do you think Nelson suggested I do?
Hey, that 30.
Pay 30 years.
Continue making the payment. He said, all you're doing is changing who's getting the money. And he said, let me ask you a follow-up question. When the life insurance company receives 33 years of payments, who do you suppose they're putting that money to work for? And I said, well, for all the participating policy owners. And he said, precisely. And what a wonderful group of people to be in business with. Because they all cared enough to ensure their own life or the lives of the people that they love. What a wonderful group of people to be in business with. And when you send money to the life insurance company as premium, and they put that money to work, and they're only responsive to the participating policy owners, and you're dealing in theoretical 100-year lifespans, who do you want to be in a 100-year relationship with? So if somebody says, I need to have an amortization schedule that spans 50 years, I'm like, thank God. That works for me. Isn't that good? Oh, okay. Ken's the only one that thinks that's good. Nobody else.
No, I think it's good. I think I would have to. You're not giving them an I know the rules of your trust, so they can't go to the community bank.
I actually don't think you're correct. I think if my memory serves me well, they have to go to the trust first.
Yeah.
But if the trust says no, then they can still go outside. Jason, correct me if I'm wrong, but that really stuck with me when we had a conversation that you just have to have first right of refusal. But if you guys say no, it doesn't disallow them from using an outside bank.
That's correct. Yeah. If the trust has insufficient access to capital to make it work.
Do you allow refinance, or do you just encourage them to make additional payments if their financial situation gets better and they're like, hey, Dad, I don't want to pay this for 48 more years?
Oh, that's such an awesome question. So ridiculously simple. Prepayment privileges are embedded without penalty.
So if they can take it over with their own policy at some point, that might be in their best interest, maybe, so that their brother's not getting all this money someday that they've paid back. That's where I'm going with this. I totally believe in it. I'm just trying to see the fairness in it. I don't want to pay $1 million in interest and it not come back to my bank somehow. I know it is benefiting them, no doubt. That's just where my mind is.
You know, the great thing about being in a position of total and absolute control is that you get to weigh those decisions for yourself. And the answer is, if one of our children comes forward and says, "Hey, we just want to repay that policy loan ahead of schedule," or we want to, we've built up enough capital in our own personal system of policies that we want to take it over. Hey, you're more than welcome to do that. I mean, all it's going to do is replenish the accessible capital that the trust has access to now. So I'm not opposed to that one iota. Isn't that good?
So Jason, when they take that loan, how do you decide which policy you're putting it on? Or are you using an outside source like Indeed or somebody like that?
No, it's there. I think there's another part to that question, Jim, as well, that I'll introduce for the benefit of everybody. So when we got to right around, I think, 7 policies in our program, my wife Rebecca, she was like, "Oh my goodness, like, we've got these loan repayment schedules, and I don't know, I can't keep heads or tails as to what policies all the money needs to go back to." I said, "Send it back to whatever policy will hold it. It's one consolidated system. All that matters to me is where the money's flowing to. It's going back to the life insurance company, and they're putting it to work. What policy number it gets attributed to is irrelevant to me. Send it to any policy that'll hold it. What you're doing is checking the box on the amortization schedule of the loan, not where the money's going back to. Did we get the payment? Yes. What policy am I sending it back to? I don't care. Whatever one will hold it."
That part I understand. My real question is which policy you're taking it from, or what against.
Whatever one has readily accessible capital. It's one consolidated system.
Would you
But aren't you?
factor in like the age of the person that you're taking it from, just the less likelihood of them having a death, or try to do it evenly across them, or it really doesn't?
It just doesn't matter. Forgive me. I shouldn't dismiss it as that. Please forgive me. That's not what I meant. It's not relevant to the way
It's
that
irrelevant, yeah.
the way that we do it. It may be relevant to the way that you decide to do it. And that's great. That's your method of doing it. But we just want to maintain, to the greatest extent possible, ridiculous simplicity. We have policy numbers that trigger premium payments due. We have loan balances, and we have amortization schedules from loans outstanding. Are we getting payments back on those loan schedules? Yes. Where it goes is whatever policy will hold it. Where it comes from is from whatever policy or policies, plural, that we can borrow against. That's it. And we've got a very, obviously, I would say, meticulous method of tracking that. And everything that we do is auditable, and we've been audited, which is awesome. So because the primary motive has to be, in the eyes of the IRS and the Canada Revenue Agency, ridiculous names for those entities, by the way, is if your motive, if you're essentially, if you're writing off interest, if I can describe it that way, and your motive has to be to earn taxable income. So if you're applying an interest rate that is less than what, get this, than what the government prescribes, then you're not fulfilling that motive. So we just 10% has always been well above the prescribed rate. I don't think the prescribed rate has ever exceeded 5%. And so we check the boxes there when, our good friends from the government knock on the door and go, "Hey, would you mind just giving us a sample of these loans? And can we take a look at how you're administering them so that we can check the box that you're fulfilling the motive?" My motive is to be in a position of control over how we finance the things that we need throughout the course of our lifetime. That's it.
Ridiculously simple.
Yes, sir. Somebody asked about divorce earlier. There's some divorce contingencies in our family constitution.
You do a family retreat each year.
We do.
will spouses be? I'm assuming they'll be allowed to come,
Oh yeah, absolutely.
but
Yeah.
they have no voice. They have no vote. Will the trip be paid for them, or are they paying for
Oh yeah.
themselves? How does that all work?
Yeah, it's a really great question. So I'll work backwards. So the trip is covered, for both spouses. Um, Spouses are actively engaged in the family banking conversations because they're actively engaged in borrowing and repaying. The family constitution, when we're reviewing any element of it, we definitely acknowledge spouses' input, but we're not running past any of our decision making and governance past
I see.
a spouse.
I see.
Yeah.
Jason, are your own siblings and sort of extended family a part of the system? And
Absolutely.
how do those policies? I guess your trust has policies on those people as well.
Yeah, we have of the policies that are in force, we have 27 individual lives insured. And I only have one sibling, my sister, and her life is insured. My brother-in-law, he's a policy owner as well. We don't insure his life, mind you. All of our kids, my nephews, my nieces, anybody that I am in business with. So if you sat down with me and said, I'd love for you to take an ownership interest in my business and help me scale it, I would not proceed unless I could insure your life. There are no exceptions to that. And so there's a variety of lives insured, but yes, the family are insured and participate in the family banking element of this constitution and how we govern it. These are awesome questions.
Michael, you asked a question like very early on about the family banking. Number one, did that get answered? Number two, do you want to share anything or ask anything?
Yeah. Yeah. Thank you. Hey,
Hey,
Jason.
Michael, how you doing, brother?
Really well. Good to see you.
Yeah, it was great seeing. Thank you for that special moment backstage there when we were in Franklin. I just think that you're an incredible human being, and you're a top shelf guy in my book. And I just a lot of respect for you, man. I appreciate you very much.
Thank you for saying that. Right back at you. So I've been back and forth on the whole infinite banking. I have my own core philosophy around it. In the latest version of what the Rockefellers do, Gunnarsson and I put in there, paying yourself the spread, and classes with Todd Langford, Kim Butler, with Truth Concepts, talking about, well, what resonated with me and Caleb, I think you may have been there. It was in Salt Lake years ago. And Kim Butler said, when someone's choosing to pay back more than what the life insurance company is charging for that policy loan rate, they're simply choosing to save more money.
Mm.
And that really clicked for me. That resonated at a high level for me. I agree with all of that, but I'd love to hear from you based on all your knowledge of infinite banking, because I've never been to any of the Nelson Nash stuff over the years. I did interview him, by the way. You'll love this story, in 2002 on a local radio station here in St. George, Utah.
No kidding.
Which was a lot of fun. I ought to see if I can get my hands on that. But on the infinite banking side of things, what's your core philosophy around it? What you live by, what you teach, what you share with clients? And, I've heard you talk about control here. Totally agree with that. Want clients to maintain control versus relinquishing control. But would love to hear just your framework around it, the core philosophy around that, if you don't mind.
Oh, absolutely, for sure. I guess where I would begin is what I've scrolled to here on the screen is that, we absolutely, we honor and practice Nelson's golden rules, just as part of our own integration of the infinite banking concept in our family. And we're definitely, as it relates to, loan repayments, we understand, and so do our children. But don't take my word for it. If you ever have occasion to meet my children, just ask them, um, what does extra interest mean when you're repaying a policy loan? And they'll tell you without skipping a heartbeat, it's more premium. And so we put policies in place, we pay the premium, we, wherever possible, we access policy loans to control how we finance the things that we need or that we want. And there's a lot of high caliber opportunities that track me down personally, where I've utilized policy loans to take advantage of them. We never sensationalize the concept. It doesn't need to be. It's ridiculously simple. And when we're repaying, we always finish the loan schedule, because if we're repaying at a rate of 10% and the insurance company is only calling for 6, then we understand very clearly that the loan balance outstanding to the life insurance company is going to be extinguished before the loan schedule is finished. So those extra payments that need to check the box in completing the loan repayment schedule, those go back in to whatever policy will hold it as premium. No exceptions. And we understand that every additional premium dollar that we pay, we understand a number of things. One, it's not our money. And two, it amplifies the formation of capital. That's what we want to do in the system. We want to continually amplify the formation of capital so that we can control how we finance the things we need, and we can take advantage of high caliber opportunities that will absolutely track you down when you have ready access capital. And the golden rules where that gets attributed. So are we thinking long range? Well, we insure the lives of anyone who comes along at as early as possible, as early as 16 days of age. We're meeting as a family to have our family banking meetings where we're rewarding our children and my nephews and nieces for their participation in the program. They're financing things already. My nephew, who's out of province right now working a summer job, he's 21. He's already financed 4 vehicles through the program. He's doing really well. Like this, he's earning like he's making in a W-2. He's making like $4,000 a week in his job. And so he's not allowing his expenses to rise to gobble up all of his income. He understands that the money must reside somewhere. And so we're not afraid to capitalize. We definitely don't steal the peas. We have golden rules around that, as you're all aware. And it's all about rethinking your thinking. Like something that was expressed to me years ago, and it's never left me. Nelson's son-in-law, David, when we were recording the documentary film that I had commissioned on Nelson before he passed, David said in that, and it's in the documentary, infinite banking concepts is not a financial plan. It's a lifestyle. And we're living proof of that. And that's what I shared in Franklin. We are living what you are all talking to your clients about. Isn't that good, Michael?
Yeah. 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 It's really good. And I appreciate the reminder on all of that. It's good to hear that. I've gotten tied up in the rate of return, being in the truth concepts classes and looking at all that.
Yeah.
And if I meet a client that, they're already putting away 30% and they're living off of 70%, it's all about, strategy of, how can we create this permission slip and how can we create this volatility buffer and these different things like that, which adds a lot of value to their lives. And definitely, the estate planning side of things, family constitution, all of that. But this is a whole different mindset and way to think when it comes to money and creating this ecosystem within it. Is that what I'm hearing from you?
Oh, Michael, absolutely. And if I can expand for everyone's benefit on what Michael shared. So something that I've encountered going into my 19th year of implementing this process in our family is this notion that may exist out there that Nelson somehow frowned upon the function of investing, or what he frowned upon was speculating and gambling. And But what he made very clear anytime I was blessed to hear him speak, and this question would come up, like, what about investing? Like, if we want to put money away, and Nelson would say, again, the essence of this is to control how you finance the things that you need or want, which can certainly include investments. I have financed a number of investments throughout these past 18 plus years through the device of policy loans. But what we see in the marketplace is people start leaning into what you're describing, Michael. It's like, I'm getting focused on rates of return, and that's all great. If that's where your focus is, that's great. That is a fatal error in thinking as it relates to the infinite banking concept. It's all a matter of where the money's flowing to and who it's being put to work for and for what time frame. And people almost fell out of their chair when they had discovered that I've been a dividend investor for 32 years. Well, I thought you shouldn't invest in the stock market. I don't invest in the stock market. I never ask, what is the share price going to do? I always ask, what is that business becoming? It's a completely different train of thought. It's a completely different method of determining whether or not I'm going to deploy capital to become a co-owner of that business. So again, it just begins with the way that we think. And I don't get pulled into any of those types of conversations with prospective clients. I'm not taking on any new clients. I haven't for 3 years now, but I am the tip of the arrow. So when people come into our ecosystem and they say, I want to talk to Jayson before I talk to anybody. Okay, I'm happy to do that. I'm the tip of the arrow. Once I speak to that prospective client and they have clarity on the problem and the solution actually matters, I pass them along to the right person on my team, and away we go. But boy, there's a lot of clarity that's needed at the front end of this, because when you're meeting people, Michael, where they're at, that's where they're at, because the marketplace tells them, listen, we can do much better with your money than you can. Well, you know how much money I've paid in management expense ratio, fees, whatever you want to call it, for 32 years? You want to know?
How much?
Goose egg.
Yeah.
Zip.
Yeah.
And so the only thing I'm managing is tracking how the dividends are growing my program every 90 days.
Yeah.
So
Yeah. That's great. Do you have a book, Jayson, that on your core philosophy around all of this, or do you use Becoming Your Own Banker?
yes, to answer your question, yes, I have authored, we're up to 5 books now, but Nelson's book, Becoming Your Own Banker, there's never has been, never will be a comparison. Yeah, thank you for reminding me of how grateful I am for him. Yeah, I miss him. I think about him every single day. Every day.
Beautiful legacy, Jayson. Thank you.
Yeah, thank you, Michael. Great question.
I have a
All
question
right.
on the business partnership thing. I just went into a business partnership, wrote the operating agreement that we will have buy-sell agreements. I know one guy real well, but I don't know the other 2 guys. So how do you approach that subject where, hey, I need life insurance on you when you just met them?
Um,
That makes sense.
yeah, it makes perfect sense, Tom. Thank you for asking. It's the way that I typically position that, if I'm taking on an ownership interest, active or passive, in a business, I'm making that conditional. So before the check gets written, before my time gets committed, that's a part of it. The thing about buy-sell agreements, I can tell you, I've lost count of the number of buy-sell agreements that I've encountered that just aren't executed.
Right.
They've been written, they've been distributed, but the signatures are missing. So there's certain elements that I cover, and I don't say that that's what I need. I say that that is a non-negotiable element of either receiving capital, receiving my time and my experience, or a combination of both. And so without consent to insure your life, we don't have a deal. I don't care how good it is. Because if you've ever woken up to the news that someone has passed away suddenly and unexpectedly, no different in our personal lives than in business. I've never been to a funeral where somebody said, you know what, Billy died at exactly the right time. Thank goodness.
Sure.
So it's not negotiable, plain and simple. So I have one of my core values is that all progress begins with telling the truth. And so I always ask a potential business partner, may I take a moment to speak my truth? These are the non-negotiables. If you have any questions, please ask, and I'm happy to answer them. If you don't, let's get rolling.
Right. Cool. Excellent. Thank you.
Yeah, you're welcome. Isn't that good, Tom? You can take that. You just make it do your own. You're going to hear Tom now and just go, hey, can I take a moment to speak back to you?
This
What
afternoon.
Tom's next phone call after this is done?
Isn't that good?
Yes, sir. Jayson, we got, with the time that we have left.
Yeah.
Michael Sparks asked a good question in the chat. He said, is there a way to get some sort of guide for this? And then I think that leads us to like, where do we go from here? There's a lot more questions I'm sure people have. What you shared has been really inspiring and really helpful. What do you want to go? What do you want to happen from here? As I know that there's many people that registered to be a part of this that will get the recording.
Yep.
And we might make a portion of this live for everyone to see. But so I just wanted to, I want to hand it over to you and please land the plane where you want.
You know, Caleb and I, we've been talking about, and I think Caleb can attest this. I can't speak for him because we didn't chat about this element of it, but I think we feel called to as well, just to create something together. And we don't know exactly what that is yet. And frankly, we don't want to guess either. And so we'd rather build something that we know for certain is something that advisors who are here and advisors who may receive this message would truly value. And so I'd love your help.
What comes to my mind, Jayson, and I just would encourage people to go and chat, because that might be the best way so put this in chat. For me, it really comes down to applying the family constitution, because you've mentioned you don't have to be rich to do it. I firsthand know that my family would benefit and people's families in general would benefit by applying this.
Okay.
But it is overwhelming to even think about where to begin.
Yep.
And I think that would be really special if there could be some type of process, workshop, or just like a guide to like how we do this ourselves.
Okay, thank you.
And incorporate insurance into that. And I think there's people out there that have talked about legacy and all, but I think that you could marry the family constitution, all the things that we went through, and infinite banking. And I think that there could be something really interesting and special there.
Caleb and I are going to have a follow-up conversation, and then we're going to determine where we go from here with the community of professionals and how we can serve around this, because people are saying, teach us this stuff, show us what you're doing with it. And Caleb was like, well, why don't you just talk a little bit about it, and then we'll figure out what we can do for advisors who have a hunger for this. And so we're going to figure it out. You've got our word, and the raw material that you've given me today has really helped spark some additional thinking. So thank you all. I'm very grateful to all of you, and keep serving families. Have an outstanding rest of your day. And I'm not a hard person to locate. You can find me on social media.
Yeah. I was just about to say, shoot us an email if you have additional thoughts. There are many people that weren't able to be on, so we're going to be sending them a recording. And so if you're watching this after the fact, shoot us an email. And then also, yeah, Jayson, I look forward to hearing some of your thoughts and here to be of service. So excited for what the future holds.
All right. Thank you, everybody. Take care now.
Okay.